Everyone, welcome to the market snapshots for today. So the overall market has become red. Uh, I think the sentiments are not uh, inclined with the equities market in general. If we look at Nifty, it was down not much, but almost by 0.13% at 24,398. Nifty 500 was down by 0.28% at 23,368, and Nasdaq was down by 21.77% at 29,173, and S&P 500 was down by 0.45% at 7,503. Let's look at the numbers. This is Nifty 500 for India. The advances were 152 to 348 to declines. Mm, I think very deteriorating advances to decline. New highs got 14 new highs against 486 new lows. Breadth. Now, this is, I think, an important point to discuss. I think yesterday in the Indian market, something I would say extreme happened. The reason being the breadth in almost all the indexes, be it Nifty, except Nifty 50, in Nifty 500, Nifty 250 small cap, Nifty micro cap, Nifty 200, the breadth has fallen by almost 5% on an average, which is not a very good news, I would say, for the markets. And if we look at the numbers itself, it is above 20 MA, it is 284 stocks, above 50 MA, 289 stocks, above 200 EMA, 270 stocks. So I won't say much going right about the markets, but we'll see. Looking at the chart has turned positive. It has taken a direction. Mostly, if it sustains to those levels, 50 MA becomes uh, trending upwards, which is what we are looking at. So overall, the structure is fine. There's no problems there. This is Nifty 500, similar looking chart. The structure is positive. It is trying to find a momentum. That is the biggest point of issue, that the strength is not coming in the markets. It is just it gains certain momentum, and then, like, if you see from here, there was certain momentum, it started giving it back again, some momentum not sustaining. That is where the problem is. If we look at the trend, participation and breadth for the Indian markets, this is Nifty 50. For Nifty, the trend is bullish, participation is weak, and the breadth is strong. Nifty 500, uh, the trend is bullish, participation is weak, and the breadth is strong. This is US markets, and I think overall the markets globally are not doing well. If I talk to you about the best market, like, which was doing fine for the month of June, from my perspective, it was Indian markets. But somehow, I think if I look at last 10 trading odd sessions, I think it is US markets who are again. So basically, the investor sentiments are back with the US markets, with everything what is happening globally. I think somehow people are finding more confidence in the US markets. And the problem, I think, what is happening with, like, markets like India, uh, although structurally it was good, valuation wise, Nifty 50, Nifty 500, everything was looking good. But the problem I think the investors are facing right now is the rising dollar. So even if they want to put money in the Indian markets, I think the way dollar is rising, a lot of their returns would be compromised, and that is the reason the sentiments are not in sync with the rise. And that's the reason every time we see markets going up, something happens, and almost all the rise is given back in a day or two. Like yesterday, like 5% of breath crashing is simply not good for the markets. 5% participation breaking down, 10% participation breaking down, I mean, doesn't matters, it is part of the game. But then if an overall breath goes by 5%, that is not something which is good for the markets. Coming back to the US markets, this is advances to declines. The S&P 500, 284 advances to 216 declines. New highs got 20 new highs against 280 new lows. Breadth, this is what I was talking about. overall, I mean, this is the market where literally there is something positive which is has been happening from last 2 weeks or so. Talking about the numbers above 20 EMA, almost 330 stocks, 50 EMA, 329 stocks, above 200 EMA, 326 stocks. So I think a very strong sustainable breadth in the US. This is S&P 500. Let's look at the chart. This is Nasdaq. Uh, the chart, I mean, overall structurally it is a positive looking chart, but then it has somehow lost its momentum, not going anywhere, just trying to consolidate. It's a range bound, and anyways, I think what is happening in the US markets, a lot of liquidity from Nasdaq has already started to diversify in the broader indexes. So anyways, I am not looking for any positions in the Nasdaq 100 universe, just because the participation and breadth have not been supportive. At the same time, the market has also become range bound. S&P 500, this is the strongest index in the US or globally, I would say. The reason being, the chart looks good. Second, the participation and breadth has been consistently very, very good from last 10 odd trading sessions. So this is where I would want to put my money. Uh, Russell 2000, again a very strong looking chart, very similar to what S&P is doing. The only difference with Russell 2000 and S&P 500 is I find S&P 500 to be little more consistent than Russell 2000. Russell 2000, I think the participation has been little volatile, although the breadth has been supportive, but then the participation is volatile. Whereas if we look at S&P 500, I think the participation and breadth both are in sync with the rise, and that is the reason my vote would be for S&P 500. Let's look at the numbers for trend, participation, and breadth. Nasdaq bullish, participation is mixed, and breadth is mixed. S&P 500 bullish, participation is mixed, and breadth is strong. Russell 2000 bullish, participation mixed, and breadth is strong. I think these are the major uh, components, which are telling where the markets are heading. US yields are rising, and that definitely leads to a lot of compression in the equity markets, and that is what we are seeing. We are not seeing, the follow throughs happening in the markets. Even if there are certain stocks which are making new highs, they are not getting follow through. The investor sentiments are not in sync. They are not getting bought again, and US yields have been rising. That's the major reason. Second bottleneck to the rise of equity market, dollar. Till the time dollar keeps rising, the problem is that particular indicator doesn't supports US equity to grow. At the same time, any emerging market cannot grow with a dollar rising, because it puts too much of downward pressure. If you look at the supply of money, what happens is, uh, for instance, if I talk about a country like India, even if it wants to export a lot of things, the problem is the transactions would happen in dollar terms, and the value goes down the moment the dollar is rise. So basically your margins get compromised, and that is what maybe most of the investors are looking at. They would want to put money into a business where the profitability is consistent, the margins are good enough. But there are when there are a lot of variable factors to attach to the growth. I think investors start looking at, uh, they don't find confidence in putting money, and that is where the struggle is. VIX has been very, very neutral, no signs of worry there. Bitcoin and gold. See, if you remember, I have been telling Bitcoin is your best indicator. Bitcoin is your most suitable forward-looking indicator. If I think US has again attacked Iran, and the first thing to react is the dollar, is the Bitcoin. It was finding its ground, it was trying to rise, and the moment that happened, so basically Bitcoin is the most volatile and most risky asset class amongst everything available in the universe. So what happens the moment investors find that the sentiments might not be in favor of trading risky equipments, the first thing they do is they liquidate their positions from Bitcoin. So that is the reason I'm saying it's a very, very good indicator, to understand where we are headed. Let's look at the charts. Dollar, like I said, it has been rising, which is basically not good even for the US markets, not for globally any other markets. And this is Bitcoin. Like I said, see, it was found, like it formed a base, gave a rise of almost 5-6 thousand points, and then the moment something bad happened, it has reacted to the news. But again, very good long and short opportunities if you're a day trader for Bitcoin. Gold, again, I mean, this is also, I would say, a very good indicator in terms of sensitivity, but then not as reactive as Bitcoin. But overall, gold sentiments are also not positive at this point of time. So, like I said, I think, like I have been saying throughout this week, the overall sentiments are very mixed bag. People are not getting confidence where should be they headed to. And sectorally, what I'm seeing is a lot of money is rotating towards the defensive sectors like, consumer discretionary, health, industrial segments. So basically, what they are telling is the market is for sure not bullish. I won't say it is bearish, but it is not bullish. So if we are somewhere in between, I think we should also plan our bets accordingly. There's no point being very, very aggressive in the markets. Look for sectoral strengths. Where do you find certain sectors are outperforming? There are ample of opportunities. It is just that you'll have to work a little harder, and I think a sectoral play is what is needed at this point of time. With conservative bets, going all in would not be a very uh, good sentiment to have about the markets. That's everything for today. I hope you all found this useful. Thank you so much and see you next time. Have a good one.